at the end of the day, like, it's not life or death. It's more of like sometimes your ego, I think, that hurts the most is like, did I just burn 8 years of my life on this? And I was totally, and I was wrong.
Welcome to the Measure Success podcast, where we talk to top leaders about effective strategies that inspire success. I'm super excited about who we have with us today. This is not your ordinary entrepreneur. This is somebody who has been one of the fastest, literally number two fastest company in the nation. And he's also had crazy challenges. And now he's actually been able to overcome those challenges in some incredible growth today. His company is called Mode Mobile. His name is Dan Novias. I got that right. Okay. And he's going to share about his stories today and what you can take from him. Of course, we're going to, of course, talk about his company and what they're doing, but also how they're pivoting, right? Anybody who is out there knows in business from 2019 to today, business has changed so much. We had the COVID challenges, right, in that period of time. And then, of course, what's happened with AI over the past few years is just the beginning, right, of substantial change. So, Dan, welcome to the Measure podcast.
Thanks for having me, Carl. Yeah, happy to be here.
And once again, for those who don't know, Dan is the co-founder and CEO of Mode Mobile. It's a company turning everyday smartphone use into real earnings. He's leading a fast-growing movement to flip the traditional mobile model and help users get paid for their screen time. They have over 100 million active users they show on their website, and he company is highly profitable, which is awesome. Once again, compared to some of the things you talked about in the past. So, Dan, let's start from the beginning. How in the heck did you get into doing this business? What decided I'm going to go into and become an entrepreneur?
Yeah, to become an entrepreneur, that started kind of as a kid. I was always enterprising, to say that. So, sometimes it would get me in trouble, whether that was, early days Pokemon, which I find out that my Pokemon cards are worth a ton of money now. My mom found them in a move. But I used to, deal those and resell these Charizards, which I wish I would have kept because now they're probably worth like, 50K a piece. With the exception of like little kind of like, high school, middle school hustles or whatever, I started a company when I was actually 16. I was working at a polo store at the time and was not making much money. Used my employee discount effectively to resell items on eBay. And in about 4 or 5 months, made about $30,000. It was pretty significant, actually. And then enough to get the starting capital for my company. I mean, that's a whole long story, but I know we have kind of limited time today, so I won't go into every detail of it. But it is maybe for next time. And so ultimately, what got me into entrepreneurship was really just this. It's just how I was wired. I grew up between southern Indiana and São Paulo, Brazil, my whole life, and so you'd see these very differences in the cost of things or how people live or like where products are available, and so that's always played a big part in my businesses. Even till this day, like our company is a very worldwide approach. So these 100 million monthly active users, we're scattered around 170 different countries, in terms of user base. And so, and what I think is the takeaway there is, um, everyone always tends to focus on like one market, but there's opportunities and arbitrages and inefficiencies in a lot of different other markets. So, in high school, my business was really focused around exporting like high end electronics, whether it's like a MacBook or an iPhone or a BlackBerry, to countries like Brazil or the UK or Australia. Then you can make money on the pricing arbitrage. And by the time I was a freshman in college, it was doing a couple $1 million a year. And I was able to actually run that business and stay in college, got a full ride, and did entrepreneurship at Indiana University at the Kelly School of Business. And ran a bunch of companies in high school, or sorry, in college as well. Like I did the fraternity screening printing, started a website. This is pre Spotify, but where it was actually called fratstars.com. It was a music playlist site that college students would go to, and I had 1 million people a month listening to my music
Wow.
playlist. And that's where and this was like in the age of Barstool Sports, when it was just coming out, and Elite Daily, and all these kind of like millennial kind of content sites that bustle, like that type of stuff. And that's kind of what got me into the digital world, to be honest. Like, I would say that, like, I was doing e-com and drop shipping, but what got me into the digital actually came out of an unfortunate circumstance. And this is kind of thematic to what we're talking about today, which is the need to like pivot and kind of iterate. But yeah, I remember being, I had just graduated, I was living in Chicago at the time, and I had a warehouse in the UK, and it would send out all of our products, throughout the UK and Europe at the time because it was still part of the European Union. And the warehouse got robbed, and did not have insurance. And
Oh,
I
no.
and the, yeah, and electronics is a very low margin business. You're buying something for like a grand. You're lucky you can make $50 to $75, right? And so that was a huge impact on the amount of money I had at that time. And you know, I was like, man, like, what do I do now? And like, I could go back into this and keep doing it, or I can kind of move more into this digital world where it's like I can have crazy distribution. You can't just get, I mean, you can get hacked technically digitally, but you can't just get like lose all your items like this. And that's where I decided to double down on that. And it was kind of in that age of, this is around 2012, 2013, where you're seeing a lot of these kind of new platforms come out like Uber and Airbnb and Lyft and stuff. They sell the whiskers on the front of the car at the time. And then that's how I got into that. We got into the mobile space. We built an app, with and met my co-founder. And my co-founder and I have been working together for 13 years,
Mm,
actually, and we actually originally met on Fiverr, believe it or not, when he was
wow.
17 and I was 23. And so, and he's just a high school kid in the UK and wanted to work on a project, but didn't feel confident in his coding skills at the time. And we became friends, launched this app. This app made like 10 grand in a week. And I was like, wow, like this is interesting. And then convinced him to take a gap year. He moved to the US for like effectively a year. We tried to spin up a bunch of different apps and do our own startup. And ultimately, we had success with one after about literally a year, where this app really took off. And I'm talking like, we were making anywhere between 500,000 to $1 million a month on this
Wow.
one product.
Yep.
And he was in freshman in college at the time, and we basically had this conversation was like, "Hey, I think you should drop out. Like, this is wild." And then he's like, "Look, if you, in order for him to get a visa, because he can only get the special
Oh,
circumstances visa, meaning people of extraordinary ability, we had to basically figure out how to raise a venture round." And so that's when I went out and did raised $1.5 million from a seed investor. And he moved here, and we started working together, started building a bunch of apps, and started like getting into that space. So I guess like to answer your question, how we got into this, like that was like or I guess that's my journey, and this is I'm 20, maybe at the time I'm 24 when this is all happening, like 23, 24, 25. And we kind of just never had a crazy success, never had like utter failure either. And we would just kind of have these ups and downs. We'd have a little product that would take off, we'd have a small exit, then we'd try something else. And it was like a hits driven business. It was very, we tried to build a platform, but that basically allowed people to rapidly build apps. And obviously, not like you can do today with AI. At the time, it was more like a Squarespace. And that business model was just really difficult to scale. And so ultimately, the idea of mode and this idea of kind of like rewarding people for the time they spend on their phone really came as a multi step iteration of understanding how to launch a lot of different types of products in the app space, how to gamify, how advertising arbitrage or how advertising works, how like to buy traffic. And, I remember we had launched this product that, brought all these services into one place. And specifically, they were media services. And, it did not work. People just, but we only had one type of user that were using it. So we interviewed that user and we're like, hey, why are you using this? And turns out that they were using it just because at the time there was this like kind of, it was like just a time and place. Like we knew this wasn't sustainable on term, but if you tapped into the APIs of Spotify, SoundCloud, YouTube, they would show no ads and you could basically get all those services free without ads. And obviously they're going to close that loop at some point in time, but that's why people were using the service. And then we found out like, well, why is that the case? And it's like, well, I don't have money to pay for streaming. And then we're like, oh, like what if we paid you for streaming? Would you be interested in it? They're like, oh yeah, I'd be definitely be interested in that. And so then we just set up a landing page that said, hey, get paid to stream media, and we had like a quarter of a million people sign up in like a week, with this viral loop. And that's where we decided to focus in on that, and then we launched it, had a lot of success in terms of people being interested in the idea. But where things broke down was like actually the revenue model of that because people, it's really hard to make money like to in streaming in the first place, especially music. So that's when we expanded into other services like gaming, news, shopping, etc. Then decided to focus more in on Android. And that's what made the company really take off. Like, then we started actually generating revenue. And we're able to achieve that, 32,481% growth that we talked about, that landed us that recognition with Deloitte. And yeah, I mean, you could think everything was going to go great, but then you and I were talking, prior to the episode, which I can go into, of like, then when the fan at the end of Q1, after your best ever time, and then things kind of like fall off, and you're like, oh man,
Uh,
like what
So,
now? So
so first of all, I love for a lot of entrepreneurs, it is part of your DNA, right? It's not uncommon, right? That people say, yeah, I mean, I remember myself, I would pick berries off of a local, like, here in Oregon, you can get blackberries for free, right? And so I'd pick them and, like, because 'cause they're like weeds here, and I'd pick the
yeah, yeah,
blackberries and, like, sell them, like, to neighbors. Like, I had that, like, entrepreneurial thinking and spirit, like, "Hey, if I just do this and pick this, I could sell it, make some money," right? It's
yeah,
not uncommon, right, for people to have that. But now, moving forward, what I'm curious about right now is from the outside, here you get ranked by Deloitte, you're number 2. I'm sure you're getting a lot of publicity and exposure, right, from that experience.
yeah.
And then there's the, "Oh, crap. I've raised money. I'm not making money." Right? And that kind of fear of God, if you may, of like, "What am I gonna do next?" Of like, "How
Yeah.
do I turn around this model?" So, how did you, like, center yourself and go, "Okay, I need to pivot to turn this around," and what was that experience like internally when you were going through that?
It wasn't the hardest thing that I've ever had in my life. I one time I got meningitis once, and it was worse.
Oh, wow.
And I thought I was going to die. Um, I'm happy I went through that experience though first, because I would have thought that this was like, I think a
The
health
end of the world.
ailment is like, and and the day, and we didn't know I had meningitis at the time, so it was just like, it ended up, I had to go to this guy. His title was diseases of unknown origin, and I'm like, wow, this is what, and I'm like 23, and I'm like, this is what my life has come to at this point. Like, sucks, like, and anyways, it was a very enlightening experience, and so I'm happy I went through that. I would say that this is definitely in the top, few of it, because it's multiple things. One, it's this thing where it's like, there's a lot that you can learn. Like, looking back on it, I'm actually really thankful I've went through this experience in 22, and every really hard experience. It sucks when you're going through it, but at the time, like my mindset was, because again, going back, like we had been at this literally, literally for, like, at the time, maybe, like, 8 years, right? That doesn't seem like a long time, but it is a long time for a
Right.
startup. Like, every year that goes by, the longer that you don't die, the higher likelihood of success. But it was, like, abnormally long for us, right? And then we finally hit it, and I'm like, "Okay, like, we're there," you know? And then boom, like everything comes crashing down, because what was happening is, like, the market was really frothy at the end of 20, or at the beginning of 22, and a lot of our revenue was coming from advertisers that were in that frothy industry, and many of which went bankrupt. Voyager and FTX and some of these like crypto companies, along with a lot of these companies that were supposed to IPO that couldn't IPO. And so, it was just like a whole cascade of events. And we were focused on growth at all costs, at that time, because that's what the market was rewarding. So we had extended payback periods, meaning, like, say that it
Mhm.
used to take me 3 or 4 months to capture my capital back from, advertising to a customer, to 9 to 12 months, and
Yeah.
then but what's happening is, if those guys don't pay me, then my entire unit economics broke. And at the time, we had 100 people, and so now you need those cash flows for that too. And so it was just like literally like insane chaos. And I never had been to a situation where, because when you're trying to manage your burn and you don't have a ton of revenue, it's easy, you just like cut, right?
Yeah.
But when you need the revenue plus you have a certain amount of capital, you need to actually like really plan things out. And then the other things that were kind of happening in the market were, you know, uh, you had this crazy uptrend, and now you have a downtrend. And so it's going to be really hard to raise around, because the numbers aren't going in the right way. Right. And on top of that, who is the investor that we're going to raise this from? We can't raise it from seed because we're too big. Can't raise it from growth because it was going down. And so there's not really anyone to raise it from at that moment in time, unless you want like really bad terms, which a lot of companies did take those terms.
Yep.
And so, I guess my thought process at that time is like, okay, first, like, what are as is always a question I ask myself. First, what can I control? Like if I can't control something, people get hung up on things that they cannot control. Like I can't control the state of the economy. I can't control the interest rates that suddenly are here or not here. I can't control the war. I can't control these things. So got to focus on the things I can do, and I'm not going to let these other things like really impact my like what I'm doing. Um, the second is like what am I good at? And what do I need to do exactly right now to essentially plug the leak and not die effectively,
Yeah,
right?
yeah.
And
Mhm.
for us, it was like we had to lay off half of our staff. We pulled back on marketing in a major way, and then we're like, okay, like let's reinvent like what exactly went wrong about this business model, and let's focus on profitability. My co-founder and I decided to redo all of our core values. A big reason I
Good.
think also what got us to what we did was, we hired the wrong people. We got enamored with the scale fast, and if you scale fast, you hire the wrong people. We got lax on that, and it really hurt us. And so we kind of look back, like, hey, over the last 8 years, like, what are the characteristics of the people that we most enjoyed working on? And we
Yeah,
literally
yeah.
would put their name on something, and it's like, what is and then kind of create an overlap, and then we shared that with our exec team. They added in that sense, and we came that, and then now it's like embedded into my culture on a weekly. And we have a weekly meeting called ACT, which is the abbreviation of our core values. Um, and we recognize that in the company every week, right? And
Bro.
people give like these kudos to people to get these little points, and they can redeem these points for cash and gift cards and stuff with the company. So anyway, so that was a big part of kind of how we started thinking about things. And then I went back to like first principles of what am I good at specifically, and I was like, well, I really understand consumer marketing and you know driving traffic, and being able to do that. And I was like, well, what else do I need to also accomplish? I need to figure out how to lower my costs. And I was like, well, how do I pay my users less without them getting upset? And because our whole business model is to reward people. And obviously, I want to reward them, but we need to also, not go under, because then no one's going to get rewarded. And so it was this whole thing that I was like trying to figure out ways to create value for them. And I was like, oh, what if I could pay them in shares in my company, and like like a portion of it? So say it was like 75% cash, 25% shares, and so that was the original idea. And then I was like, oh, like, what about crowdfunding? And learned a lot about it. Then I was like, yeah, I think I'm going to try that. And I easily thought I could launch it in like a month or two. You need audited financials, and that was a lot because we had a lot of, like we were not a brand new company. We had years of financials. So it took me almost, a year to get that campaign launched, get the financials, to do the PPM, all that stuff. And we finally launched it. And within 3 months, we raised like 5 million bucks, and brought in tens of thousands of investors. And then I was just like, and it wasn't a ton of money, but it was enough money to kind of keep us going, and and start investing again in the company in the sense of marketing and growth. And then the following year, we decided to do the much bigger raise for it, which was our $75 million capital raise. And at this time, like the treasury is now going in the right direction. So 2023 was our worst year of revenue, because we pulled back basically every marketing channel essentially and just kind of let it, go organic and kind of reinvent ourselves. 24 was like a year of rebuilding. So we grew 50% from 2023, cut burn down, 50% from 2024 for 23 as well. And then 25, we not only sold out that raise where we raised, sold, you can raise up to $75 million through Reg A, but we also had our biggest ever year in terms of profitability and revenue, where our pro forma was over $40 million in revenue, with just under 12 million in EBITDA, right? And this year we're on track to hit 20 million in EBITDA and 60 million in revenue. And there's a lot of iterations into what we ultimately decided to do, and I can tell you those here in a second, which is like the lessons from that kind of like mind frame of like, okay, like how do we get through this difficult period of time. And at the end of the day, like, it's not life or death. It's more of like sometimes your ego, I think, that hurts the most, is like, did I just burn 8 years of my life on this? And I was totally, and I was wrong. Like they were right. Like I was wrong. And I don't know, that's not, I don't think that's the right way to look at it. I mean, it's like easy to get sucked into that. And then I really dive into mindfulness very deeply when I go through these like difficult times, and it's helpful. And actually is very helpful to go through like, just even a 5 minute gratitude practice. I could do this 5 minute journal thing. And especially during those times, it's helpful. But yeah, I mean, like, you go through it, and that experience, um, it completely transformed our company, right? Because we turned into this like kind of community driven model. We were the first ever company to get qualified by the SEC, in my, as far as I know, to actually allow users to invest their points into shares into the company. And so
Oh,
it's
wow.
actually in our PPM. And so about, a little over half of my investors are, users of our product. And then the other half are people that just resonated with our mission and what we're doing. And we became ultimately one of the largest crowdfunding companies in the world. And one of the, things that I started thinking about, going into 2024, um, and was like, hey, if we're really successful with the crowdfunding, we do have that capital to invest in the business again. I'm not going to make the same mistake that I
Yep.
did in 2022, which was like growth at all costs, because every business has to make a decision for themselves. And that's why you see bootstrapped entrepreneurs that are doing like, you know, maybe they have a $3 million a year business that's, spitting off like, just under $1 million in cash, free cash flow. But if you try and scale that business to 5 or 10, things will change. You will need to make different investments. You actually might make less profits, and you're creating a ton of other stress for you. So, there's this thing that you have to ask yourself, what do you want, right? And for me,
Yeah.
I wanted to create a business that can revolutionize a space, in our space was the mobile space. We want to make an impact. We're a mission driven company. We want to help these people that people are struggling right now. The average American, like, 56% of Americans don't have $1,000 in their savings account. You have 6.8 billion people around the world that are earning less than $12,000 a year, and then you have over a billion people that are working side incomes, like side gig jobs, to make ends meet. So it's this thing is getting worse, and then now we're going into the AI economy, and there's going to be a lot of other change, and with AI displacement, and so these are the type of things that we're thinking about. So that decision for me was like, okay, I want to grow. I don't want to be just a business that's around this 10, $12 million a year range, but I also don't want to extend my payback period and invest and have to wait and then run through the same gambit. And so what we ultimately then decided was like, hey, like maybe we could use this capital to go buy other apps in the space and integrate our technology into them. And then we could like kind of it was kind of take a play out of the private equity book. But the
Mhm.
difference being is that our interconnectivity is really this earn OS, which is our earning operating system, like how basically the rewards and monetization works in our products. And we could buy these businesses at, these apps at like pretty attractive multiples, and then build this nice network effect. And we did that last year. We ended up acquiring like, 6 to 8 different assets. And it's just, went really well. It was like ended up becoming this very powerful growth lever for us. And then now what we're really excited about is kind of building that same kind of incentive system in all of these products, because we know that loyalty works, right? And then in the age of AI, of where we're going, oftentimes with like these products that are paid or free, it's like for example, I use Strava, right? I ran my first marathon ever last year, and
Good
I'm
for
not
you.
a runner. It was actually yeah, thank you. It was a great challenge because it's not something that naturally comes easy to me. But like it was something that like I also was very good for my thinking. But I started being a habitual user of Strava, right?
He's
And Strava has this feature. It's $70 for the annual for it. And all it really, I don't think it's that valuable, to be honest with you, but it tells you what your best runs were over the years, because it won't let you look otherwise. And I don't know, for like 7 months, I literally, like, did not pay for the thing, right? And eventually I caved and paid. But the reason I tell that story is because, I always had this thought that was like, if they just, like, let me share my health data with them, which I personally would be okay with, for, like, kinda like 23andMe, where they can sell that, data. It's not P there's no PII in it, but essentially they can monetize that, it's worth a lot, and they gave me premium for, like, a week or a month or 1 day a month or whatever it might be. I would do that trade. And so that thesis, like, really stuck with me, where I was like, that's happening across every product that we're buying, right? If you that, and every product is the same mechanism. It's like 1% of users pay for things, 99% don't, and it's ad supported. But if you offer the guy that's not paying for it an incentive to, hey, do this, like share this data or do this task or do this thing, and then you can get this for like a day or a week, a lot of people will take you up on that, and then you better and better improve the monetization of that. And so that's kind of like where the model's going, is because now it's beyond just the earn phone or the earn os and like what we built. It's like we have this network of all of these different types of data sets, and you have Gen Z users, you have boomers, you have tech professionals, because every product's different and it doesn't have incentive, and then we embed the incentive. And I have a lot of thoughts of where that's going with the AI space and kind of what we're doing with it to kind of like help people take part of the AI economy and not get displaced by it.
Yeah.
Um, but you see, all of this came from that problem that in 2021 or 2022, when we ran into this, like I cannot tell you that that was actually where this company was going to go. And so things happen the way it was supposed to happen. That's actually my mentality now. I mean, it's easier said than done. Obviously, like bad things happen, you get upset. But when I reflect, that moment of reflection is, there's a reason that this is happening. And there's a greater opportunity here, that is it presenting itself at this moment in time. But if I just look back, that could just point to so many times where that like I feel so deeply with that. And so that kind of keeps you in more of a centered state. Because that's what it is, like being an entrepreneur. It's like it's just keeping your emotions in check, like, and on an everyday basis.
We definitely have to talk again. This has been fantastic. I mean, you're first of all, I appreciate your sharing the truth, right, behind the reality of being. That's why I love the show is like being an entrepreneur is not easy, but it also could be the most rewarding, greatest thing in the world, right? But what
Yep.
you've done multiple times to this is you've been able to check your ego at the door, right? You've been able to pivot. You've been able to be thankful for what you have, which has enabled you to pick yourself up again, right? To tackle the next opportunity. And is your partner from the UK, is he still working with you?
Yeah, still, yes, we work every day together, and so, it's yeah, he's like my other my wife, is, he's like my work wife, it's like it's funny, and ironically, they have very similar, they're different in many ways, but it's kind of funny, like, and we've been together for working together for 13 years, right? And my wife and I have been together for 9. So, I've been technically, you know, like working together with him longer than even my own, marriage. So it's crazy.
It's really impressive because it's not uncommon for those things to fail, right? And for you to keep up the relationship and still continue to be working, right? Many partnerships don't work, right? But you found a way to again to create value with each other. I love it how you talked about you changing core values too. That was really interesting. Um, I think what's really important is to be who you really are and what you should be, right? And often we aspire to something that's as you know, a lot of venture capital is venture capital for a reason. It's not actual earning real money, right? It's not actually real
Yep.
cash. I love it how you've turned your business around into something that's profitable, adding value, and then also hitting this dark side. That's the reality, right? Of like with the massive displacement of work that's happening today, and creating an opportunity for many, right, to find another way to create a stream of income and a side gig, right, to be able to have something have a value. I think it's huge. I love there. We are going to be getting cut short here, so I'm going to ask you two quick questions to wrap up. Make sure you get our swag. We always give our guests some swag here that people don't know, probably offline. But so number one, how do you measure success in your business today?
Like business metric, like we're really looking at EBITDA per employee, like EBITDA per team.
Yeah.
We have, company OKRs. The way that we operate is like, every business unit has a GM. The GM essentially is kind of the micro CEO of that company, reports into our exec team. And I think like that's a big kind of like, way for us to kind of measure, like we want to grow, but we want to grow profitably. That's really important. um and so that's one element. And then the other way that we also measure success, and this is kind of part of that weekly meeting, um is, like the reason, like our the amount of like our churn, unwanted churn, meaning people that leave our company that we ourselves weren't planning on, you know, parting ways with because it's just not a fit, is less than 1% a year,
Wow.
right? And I think the major reason is a lot of our team members, like they really they sometimes even come work here because of the fact that it's a mission driven company. So it's like the impact that you're having on people's lives. And, as we acquire these other products, sometimes that impact is different, just that the way that they're using it. But, as we're moving into a model where it's like, hey, how can we like help? Because, there's a reason that like the army, for example, like has you make your bed in the morning. And it's like the whole thesis about it, if you haven't really read the book, it's like, it creates a little win that you can control that then becomes a snowball and it creates more momentum for the day. And I think like for us, like we're not here to say, hey, our earning solution and kind of like extra, $1,000 or a couple of $1,000 a year, whatever it's going to be, um, is not here to basically subsidize or take over like what your everyday income is. Um, but again, it's a little win, for people's lives that then creates bigger opportunities and connecting them to other ways of thinking and other ways of doing because we do that through content and all that stuff. So I think like the way that we measure success is like, not only through the metrics of the business to see, hey, are we going in the right direction? Are we bringing value back to our the 60,000 people that have backed us and backed like this vision? How do we create community for them? Like community is a big component of our company and how we operate. And like we're very transparent. We do earnings calls and we don't have to do earnings calls, but we do them. And so all of those things kind of all combined is like how we measure success is like, are we having an impact? Are we providing people earnings and savings? Because that's the core mission of the business. And are we growing in the right direction? And also are we like, being able to take on and see the next things that are coming next, right? And so we don't want to be stuck in our ways. And I think that that's a difficult thing for companies as they scale. And so, anyways, those are a few different thoughts on how we measure that, or at least
No,
how I
thank
measure
you.
that internally.
Love it.
Yeah.
What is you mentioned a couple things you've done, marathoning, mindfulness, writing, thankfulness. What's one habit you do consistently to keep you going?
Okay, if I'm not traveling, beyond the ones that we just mentioned, I actually just did this morning, like, 2 hours, 2.5 hours ago. I float in a float tank. I go to an isolation tank, which effectively is like a tube, that you're going into. That's not that big. So if you're claustrophobic, it takes you a little bit to get used to. And then you're just in darkness, complete darkness, in salt water, and all your senses go away and it's just you and you can think so deeply like well at least for me I can think very deeply. A lot of people go there to like rest and meditate. I might do that for like a minute or two just to settle myself down, but I actually go there to think and I could like think. It's like a think with the supercharge, because I can almost like visualize problem sets and things, and I usually come out with like this list of things. So I used to do it once like every quarter or something, and then my wife one time, she was my girlfriend at the time, but she was like, you always come back really energized with all these ideas and then you end up staying up all night. Like, why don't you just do a weekly? Maybe I think you're gonna get more out of it. And then it's not gonna be like this, purge that you do. And I was like, that's actually a great idea. And so then I just started doing it every week or not every week as long as I'm not traveling. But it's a thing that I've been doing consistently for almost the last 8 years.
Final question for you. How do you measure success now in your personal life?
In my personal life, the way I measure success is, am I growing professionally? Am I growing spiritually, with my not only my family and my friends, my wife, my faith, and also giving. Like, am I having an impact beyond myself? And so I think it's like, and also the last one is really being able to enjoy. I think like that's something that you forget to have fun.
For sure.
And I've really over the last year and a half, have been trying to have more balance. And balance is like it doesn't have to be at the expense of working hard. It's just like because if you're in a good mind frame, you're gonna do better work, right? And so you have to just like, but it's an art. It's not easy. I'm still figuring it out for sure. But I think that that's if you asked me that question 10 years ago or even 5 years ago, or actually even 3 years ago, you would have definitely gotten a different answer for sure.
Dan, how can people connect and learn more about what you do?
Yes, people are interested in finding out about our company. They can go to our website if they're interested in becoming an investor. We have an active offering right now at invest.modemobile.com. And if they want to connect with me, yeah, my name's Dan Devias. You can send me an email at dan@modemobile.com. I'm happy to always connect if you think there's a nice opportunity between us and you on what you do.
But Dan, hey, thank you so much. We're gonna wrap this up right now. Everyone who's listening, thank you. First of all, thank you so much for being a guest on the Moses podcast.
Thank you. Thanks for having me.
And everyone else who's listening, I hope you appreciated. This has been an awesome conversation. I love what Dan has done. He's been able to pivot, adjust, change, and is really building a great company. Encourage you to go out, take a look at Mode Mobile, MODEMOBILE.com to learn more about that. As we always like to say in the Measure Success podcast, wishing you the very best in measuring your success. Have a great day.